Car wash financing and how to finance the property, the equipment, and the business. And car washes can be an attractive commercial real estate operating business investment, but financing them is really just a simple task. And it's a little bit harder than getting a traditional commercial mortgage. And a car wash combines several components into one transaction: commercial real estate, specialized equipments, business operations, and significant site improvements. So, for new developments, lenders may also have to evaluate construction costs and equipment installation and projected revenues and the experience of the operator to do so. And that makes choosing the right car wash financing structure equally important. So, whether you're purchasing an existing car wash or building a new express tunnel wash or refinancing an established operation or expanding your current business, understanding how lenders are going to evaluate these transactions can improve your chances of securing competitive financing. So let's talk about why car wash financing is different. And car washes are generally viewed as specialized or special purpose commercial properties. And unlike a conventional office or a retail building, much of a car wash's property value can be tied directly to the operation itself. So a lender may therefore evaluate several components simultaneously. There's real estate value, and there's business cash flow, and there's historical revenue, and there's car wash equipment, and there's site improvements. But also there's need to be looking at the site and for traffic counts and demographics, and the competition, and the operator experience, and the borrower's liquidity, and the debt service coverage. And this is why approaching only one bank can unnecessarily limit your financing options. And different lenders can have dramatically different appetites for car wash properties. So, what can car wash financing be used for? Well, depending on the lender and the loan program, financing may generally potentially support a car wash acquisition. So, buying an existing operating car wash may involve financing both the underlying real estate but also the operating business. And lenders typically review historical financial statements and tax returns and look at the equipment condition and property value and normalize the cash flow. New car wash construction projects. So, ground up car wash financing can include the land acquisition and the vertical construction and the site improvements and the equipment and other eligible project costs. And construction lenders generally place significant emphasis on borrower experience here, but also their equity contribution and the market feasibility and the construction budget and projected stabilized cash flow. Equipment financing. In modern tunnel systems with conveyors and dryers and water reclamation systems and vacuums and payment systems and other equipment can represent a substantial percentage of the total project cost. And equipment financing may sometimes be structured separately or incorporated into a larger financing package. Car wash refinancing. So established operators may refinance to restructure their existing debt and potentially improve their cash flow or access equity to fund an additional expansion. Car wash expansion. So successful operators may need capital for additional tunnels or equipment upgrades or renovations or technology or additional locations. So let's talk about SBA 7A loans for car wash financing. And for qualified owner-operated businesses, an SBA 7A loan can be the powerful financing option that you need. And SBA 7A proceeds can generally be used for purposes including acquiring or improving real estate or purchasing machinery and equipment, and for working capital and for refinancing eligible business debt, and complete or partial changes of ownerships as well. And that flexibility can make SBA 7A particularly useful when a transaction includes both the real estate and the operating business. So, for example, someone acquiring an existing car wash might need financing for the real estate and for the business acquisition and for the equipment and for the furniture and fixtures and for the improvements and for the working capital. And instead of separating every component into individual loans, an SBA structure may provide a more comprehensive solution for qualifying transactions. Let's talk about SBA 504 financing for car wash properties. And the SBA 504 program can also be an attractive option when the primary financing need involves owner-occupied commercial real estate and the major fixed assets. And eligible uses can include purchasing or constructing buildings and acquiring land and improving existing facilities and purchasing qualifying long-life machinery and equipment. And because SBA 504 is focused on fixed assets, it generally does not provide working capital flexibility as the SBA 7A does. So the correct program therefore depends heavily on the transaction itself. Conventional bank car wash loans and strong operators may also qualify for conventional commercial bank financing. And banks are typically going to evaluate the historical operating performance, and they lean heavy on that. But borrower credit and liquidity and global cash flow and debt service coverage and the property value and the equipment and the management experience and the loan to value and the market conditions all play in as well. And established car washes with strong financial statements may receive more attractive conventional options than startup projects would because the lender can evaluate actual operating history rather than relying primarily on projections. So, car wash construction financing and ground up construction requires another level of underwriting. And a lender isn't simply asking whether the property has value today. It must also determine whether the completed project is economically viable. So you can expect lenders to take a look at the land basis and the construction budget and the plans and the specification, but also the general contractor and the equipment package and any environmental considerations. But then also the market demographics and the traffic counts and your competition and projected membership revenue and the average ticket size and projected vehicle count and operating expenses and how long it's going to take to stabilize. And then finally, the equity and post-closing liquidity of the sponsors. And a well-prepared financing package can make a significant difference. So what do car wash lenders really evaluate? Well, really it's cash flow is number one. So for existing operations, lenders want to understand whether the business is going to generate enough sustainable cash flow to support the proposed debt. If it does, let's move. Two, the location. So traffic volume and visibility, ingress and egress in the surrounding population and household income and nearby development and your competition can all materially influence that part of the underwriting. But three is the equipment. So if the equipment's older or newer, the condition does matter. And because replacing a tunnel system or major components can require significant capital, that's something they'll look at. Operator experience. So an experienced multi-location operator may receive a different underwriting response than somebody who's trying to develop their first car wash. And that doesn't necessarily mean that first-time operators cannot obtain financing. You can. It's just scrutinized more heavily. And it means the lender may place greater emphasis on the liquidity management, planning, or franchise or operating support and equity of an existing user. Borrower liquidity. And lenders generally want borrowers to have adequate liquidity both for the required equity contribution, but also for unforeseen expenses after closing. 6 is business plan and projections. So for startups and ground up developments, projections need to be defensible. And aggressive revenue assumptions without adequate market support can weaken an otherwise strong transaction. So we'll invest some time in making sure that those are accurate for the area. So buying an existing car wash versus building a new one. And these are fundamentally different credit profiles. An existing car wash can provide historical information, and the lender can evaluate actual sales and expenses and memberships and vehicle counts and cash flow. Whereas a new development requires much more heavily a leaning on the projections. And that additional uncertainty can affect your leverage and equity requirements in the underwriting and lender selection. So, for investors considering both strategies, financing should be evaluated before committing significant capital to a site or to an acquisition. So, why lender selection matters. And one lender might decline a car wash because it considers the property too specialized, whereas another lender may actively pursue car wash financing. That might be their bread and butter. And the difference in lender appetite is exactly why borrowers should avoid assuming that their existing bank represents the entire commercial lending market, because it's often not the case. And through CommLoan, borrowers can evaluate financing opportunities across a broad commercial lending marketplace rather than relying exclusively on one lending relationship. And the objective isn't simply finding a loan. It's identifying a capital structure that's appropriate for the property and the business and the borrower and their long-term investment strategy. So here's a reminder: start the financing conversation early. And one of the biggest mistakes car wash investors can make is waiting till after signing a purchase contract or spending heavily on development before determining whether the proposed financing structure is actually realistic. So before committing substantial capital, let's have a conversation and we can evaluate your total project costs and potential loan proceeds and the required equity that you need to contribute, but also your debt service obligations and cash flow assumptions, the cost of equipment, building in construction contingencies, and we'll talk about your liquidity requirements and your exit strategy. And understanding these factors early can prevent surprises later. If you're ready to explore car wash financing, I'm your guy. Whether you're buying an existing car wash or refinancing one, or developing a new location, or just purchasing equipment, or expanding an established operation, the financing structure can have a significant impact on your investment. And the right strategy starts with understanding the deal and matching it with lenders that understand the asset class. My name's Bill Rapp. I'm with CommLoan, the Empower program, and commercial real estate financing solutions designed to help investors and business owners evaluate more capital options and also provide and structure stronger transactions is what I do. And I welcome the opportunity to chat with you. You can visit my website, billrapp.comloan.com. Thank you for watching. Have a good day.